Finally, Tesla broke out of this range. So Tesla has been trading in a very tight range for the majority of this month. And after the earnings, we gapped up and I was able to capitalize on it nicely. And in this video, I'm going to be doing a complete breakdown where I entered, why I entered, the technical, higher time frame technical analysis. And also there was a really good level 2 and bookmap signal, which I'm going to be showing you guys in this video, that you can also incorporate in your trading to score really high risk to reward rates. So as I was saying, Tesla has been stuck in a range for the majority of this month. We can see that this is 2nd of October. That is the first trading day. On 1st of October, we were actually outside of the range. But on starting 2nd of October, we were stuck in between this range. We broke down of this range, breakdown under 241 day, but that was just like a quick breakdown and then it was brought back up. The next day, we had a bit of news on this stock. I think it was the delivery numbers. We gapped down, but since then we are just stuck in a range, a very tight range, right? So this is practically untradeable. Today, after the earnings, we had a beat in the earnings, beat on the EPS right here, 21% beat. They missed the revenue, which is pretty usual for Tesla. But yeah, it's a good beat on the earnings. We can see that the last earnings they missed, it's red. The last earnings they also missed, it's red, but this time they beat the earnings. We were gapping up, and after being sold off aggressively, holding weaker than the market for the majority of this month, this was a good gap up on this stock. Now, looking at the higher time frames, we don't have any major levels. So these are the levels you guys can see I marked on the 5-minute chart in the pre-market action. Because if you look at the daily chart, let's start with the weekly chart. We don't have any high of weeks or low of the weeks or something like that right around 240 or 243 zone. But if we take a look at the pre-market action, the last daily level we had was around 232 and basically 238 is a good daily level. But looking at the pre-market action, we were about to open near 243. So we need a few levels to play around with from the pre-market. Now, if you look at the 1-minute chart in the pre-market action, this is what we discussed and marked our levels in the pre-market webinar that we do every single market open day for the Discord members. The link will be in the description box below if you guys want to join our community. But yeah, so this resistance, major resistance right here in the pre-market. So it's not as major, but it's a major level in the pre-market. Resistance turned into support, resistance turned into support. So I just had these two levels. I was like, okay, if we pull back to these two levels, I want to enter my position for a breakout towards the upside. I'm going to look at the technical analysis. So this is my technical analysis, and I'm going to look at the tape to look for strength around this zone, 242 to 243 zone, and my stop loss has to be around 242. But again, after the market open, you can tweak your stop loss looking at the tape, which I'm going to show you guys. So right at the market open at 9:30 a.m., you guys can see that we sold off. We actually got sold off from 245. And if you guys trade options, it's very risky to trade options on a stock after the earnings or after any news catalyst within the first 1 minute of the market open, because there's a IV component, implied volatility, that is very high. So the IV comes down within the first 60 to 90 seconds of the market open and the premiums lose a lot of value. So I saw 250 calls. They were moving like crazy within the first 1 minute. So I was like, okay, I'm not touching this stock. And the IV for the same week contracts, again, if you guys trade options, if you guys trade shares, this doesn't apply to you. For options, the IV was around 136%. And after the first 70 seconds, 60 to 70 seconds, after the first 1 minute, the IV came down to 85%. And then I was looking for my entries. So on the 2nd minute, when we got bought back up from these pre-market levels, I entered my position. But on this push down, I exited because I was in big position sizing. I took 100 contracts. I lost around $2,500 on this trade. It went against me. And as I told you guys, I want to be quick off the open, because if it sells off aggressively, I might not get a chance to exit at the correct fill. So I was risking approximately 10% of my position sizing on this trade, because my investment was $30,000, losing $2,500 after the earnings. That is basically 10% of my investment is not that bad, which I was willing to risk on this trade. On the next minute, we actually pushed towards the upside. So we held this zone. I entered my position again and I covered again, because we were like, okay, we might reject from 244.5, which is my mistake. So this is not the best exit in the world. The entry was good. Put your stop loss under 242.5 and catch this push towards the upside. But I covered my position right here because psychologically I was red for the day. And then this trade, I was like, it might reject from high of the day. It's not holding above 245. Let's cover the position. So I basically traded my P&L because I was red on this trade, and because I was green on this trade, I was like, okay, let's start fresh. I'm going to cover this position and look for my next entry. I'm going to be break even for the day after this exit, which is a bad thing to do. But again, you can never be perfect. I'm not perfect in the stock market, but that is what I did. On the next minute, when we actually closed this candle like a big green candle, strong candle with volume right here, this volume was higher than the previous red candle volume. I was like, okay, now this is gonna go. And then I made another mistake because in the heat of the moment, I took 100 contracts right here. I took 100 on this candle as well, which I made money. So I was pretty much break even by 9:33 a.m. When I entered this position, by mistake, I clicked my hotkey of 50 contracts. In my head, I was still in 100 contracts. I was like, okay, this is going to be a nice winner. I can easily make like 15, 20K on this trade. So I lost 2.5K and the winner is making me 10, 15K had I taken like more than 15K had I taken the same position sizing. But then when I started to lock in my profits, so I wanted to enter 100 contracts, but by mistake, I entered 50 contracts. When I covered 10 of my contracts, I was like, the remaining position is showing me 40. And then I got mad. I was like, okay, this is a mistake. I wanted to enter 100, but by mistake, I entered 50. So yeah, I don't know what happened. I should have I entered 100 contracts right here. So I don't know how I can click 50 contracts. But in my head, honestly, I was holding 100. But then on this pullback right here. So usually what happens if you get this aggressive push towards the upside, there's a highly likely scenario that the first pullback on the 1 minute chart, especially if it's on low volume, it's going to get bought back up. Because a lot of people who miss this push towards the upside, they're going to look for a pullback to enter their position. That's what happened. On the red candle, we had low volume. Look at these greens. Greens, high volume, red candles, low volume. You don't even have to look at the tape. I'm going to show you guys a tape right around here. But you guys don't have to just look at the volume analysis. Push up on high volume, consolidation on low volume. And then I entered my another 50 contracts. This time I went for 250 calls because initially I went for 247.5 calls. And I caught this breakout towards 250. Even though it looks like a small push, it's a push from 243 to 250, which is 7 points on a stock with an ATR of $10. Which is good. I basically caught 70 to 80% of the ATR of this stock. ATR is the average true range. That means how much this stock moves on a daily basis from high to low of the day on an average for the past 14 days. So the ATR has been low. So I caught basically 7 to 8 points move, and seeing this doji on the 250, right around 250 level, I covered the remaining 30 contracts from my initial position. And when it made a new 1 minute low after a doji on high volume, I covered my position because this is my exit criteria. If I see a high volume doji right around a major level, I'm going to lock in my position. That's what I did. I'm going to show you guys my entries and exits. Before then, I'm going to show you guys a book map that you guys could have entered right here and put your stop loss under 242. But you guys can see the exit criteria was pretty good. It tried to go towards the upside again. We got another doji right here on high volume. So a lot of sellers are trying to sell this rip around 250. So I think I did a pretty good job holding my winner and exiting at the right time. Here's a screenshot of the book map, which I used to track the big orders and the market depth. Are people hitting the ask price or the bid price? Are sellers being absorbed by the buyers or the buyers are being absorbed by the sellers, where the big orders are sitting? It's pretty expensive software, honestly, but if you guys click the link in the description box below and click on special offers, you will get a pretty good deal, honestly, right? I have been using this software for the past 2 years, but if you click the link in the description box below, you can get a good deal on this one. But yeah, you can see that off the open, we had a sell-off around 242, but you guys can see these big red orders, right? These big red dots, that means people are hitting the bid price, but it's not moving down. All these big sellers are being absorbed by the buyers. We can see 68,000 shares, 21,000 shares, right? So these red dots right here, that means someone sold 68,000 shares, but absorbed by the buyers, did not move down. Big red dots, but the stock is not going down. That means sellers are trying to push the stock down. They are trying to sell their shares. They are selling aggressively, but it's not going down. That means there are more aggressive buyers, more hidden buyers in the market that are willing to absorb this selling pressure right here. So my first entry was right here and I covered just because I was like, if these buyers give up, it might sell off aggressively, which did not happen. So honestly, my stop loss should have been 242, because if these 17,000 shares, if they go through, if the big buyer at 242, if this buyer gets filled, that should be the stop loss. And then I entered my position again, and you guys can see right here, we had a big green dots. We had the absorption by the sellers, had a quick pullback right here. This is where I got faked out again. I exited my second position, but then we just had aggressive buying and we took over all the sellers right here. So looking at this book map, this helped me a lot. Big red dots, no selling. Big red dots, no selling. So these sellers are getting absorbed by the buyers, which is a really good signal to enter your position and put your stop loss right under this zone or the level. So here's my P&L for the day, guys. Overall, you guys can see 24% gain on this account in one day, but I actually like to keep my options trading account, day trading account around $50,000 because that is how much I need for day trading. So my first entry was at 931, exited at 932, then 932 again, exited at 933. So I lost around $2,500 on this trade. I made around $2,100, $2,200 on the second trade. So after the second trade, I was basically break even for the day. Then on the next trade, you guys can see the mistake I made. I only entered 50 contracts by mistake. I should have taken 100 contracts. That was a mistake. Then I added 50 more on the pullback and I covered all at the breakout above 250 and the fake out above 250. Overall, 11,000, 24% gain on this account, which is 58,000. Like now the equity is $58,000. I like to keep around 50, but yesterday I actually had a red day, which I can show you guys. And that yesterday, the price action was really bad. I lost $2,600, which I posted in the Discord group yesterday. So today we had a nice green ray. That's why keep your winners, like hold your winners, cut your losers, keep your green days bigger than your red days and keep your red days smaller than your green days. And eventually you will be a consistent trader at the end of the year. Let's do the live withdrawal now. So I'm going to blur my account number for privacy reasons, but I'm just going to refresh this page just so you may know that this is not a screenshot or something. So up until yesterday, as I told you, I lost $2,600. So my equity was around $47,000 with 11,000 green for today. So which approximately puts me around 58. So yeah, I'm going to withdraw to this account. Again, all the account numbers will be hidden because of privacy. At the moment, it's showing $47,000, which is without the $11,000 I made today. So I'm just going to write down, because it's 58, I'm going to bring it down to around 51. So I'm just going to say $7,000 withdrawal, create withdrawal. Yep. They charge me a fee, which is okay. So the withdrawal needs to be confirmed. I'm going to hide my account number. Just do this and confirm withdrawal. It should send me a notification, which is right here. Yep, done. Continue again. Yeah, that is done. So $7,000 withdrawn from day trading, and I was able to make this amount of money within the first 13 to 15 minutes of the market open. And that's what day trading gives you, the freedom to do whatever the fuck you want. But if you are just consistent at the end of the year, that's what matters. Freedom is more important than how much money you make, and then money will follow. If you focus on the process, having a good lifestyle outside of trading, just don't drink a lot, don't smoke a lot, have a perfect balanced lifestyle, focus on your mental health, focus on your physical health. That will eventually help you to make money from trading, and that will give you the freedom to do whatever the fuck you want. So yeah, that's it guys. Hopefully you like this video. If you like this video, give this video a thumbs up. If you are new, subscribe to my channel. If you guys have any questions for me, let me know in the comment section below. Thank you for watching, and I will see you guys in the next one.